Welcome to another episode of Purchase to Profits. I'm Seth Ferguson. Make sure you hit the subscribe button so you don't miss our daily interviews with successful real estate investors. And I've put together the top 7 key market drivers I look at when analyzing a real estate market. Go to sethferguson.org to download your free copy. Our guest today has worked professionally in accounting for the past 6 years and has acquired 22 rental units across the Midwest by using seller financing, the BRRRR strategy, delayed financing, and private lending. He's also the host of the Bigger Cash Flow podcast. Bo Kim joins us today. Bo, welcome to Purchase to Profits. It's great to have you on the show.
Hey, Seth. Thanks for having me.
Yeah, we're really looking forward to this. Let's dive right into things and talk about your real estate goals. Where are you looking to go with real estate?
Yeah, so I started investing, a bit more actively 2 years ago. And at the time, my goal was $10,000 a month in passive income. And since then, I've kind of bumped that up a little bit to $15,000. So that's my goal, whether that be, 100 Midwest rental units, or it might be 50 units. I'm not as focused on the number of properties, but more on the cash flow that it provides. So once I hit 15,000, I don't think I'm going to retire right away. But I think it will definitely give me the option to do so if I choose to. So that's my goal with real estate at the moment.
Yeah. And how far along are you to hitting your goal?
Yeah, so as of right now, I'm at $4,500 a month.
Nice.
In passive income. So I'd say about 1/3 of the way there.
Yeah, no, that's exciting. And I especially like how you bumped up your goal.
Yeah, no, I definitely had to do that. And it's a moving target for me and my wife because, she and I are relatively young working in corporate America. And, one of the benefits is that we get annual salary increases and we get annual bonus increases and things like that. And as we get more years under our belt, our pay increases, then in order to kind of meet that with the passive income, I think that is a moving target. But I think at 15,000, that will be, relatively safe to say that, we don't need any more money than that to live comfortably and also continue to invest. Because even once I hit that target, I want to continue investing.
Yeah, for sure. So you mentioned that you started taking the investing side a lot more serious 2 years ago. What was it that really made you focus more and say, hey, listen, now I really have to treat this seriously?
Yeah, so I've always been interested in personal finance and money since at a young age. And I didn't really see real estate as an option for me. So I saw people do it. Like, for example, my parents, they were renters. They weren't landlords, they were renters. But then the person who was leasing our house to us, she was a landlord, and she was just a local lady who lived in our neighborhood. And she just bought another property in that area. And it really made me wonder why my dad isn't doing the same thing in terms of, hey, why can't we buy a property and rent it to other people? And the answer that I got at that time was that we just don't have any money, and it's not for people like us because we were immigrants. And he just said, it's for people who have lived here in the US for a longer period of time and, know how to do it, yada, yada, yada. So that kind of blocked it from my mind for the longest time. And then once I graduated and I bought my primary residence. And then it kind of clicked for me once I rented out one of the rooms. So, your audience might be thinking it's house hacking. So it's kind of like room hacking, I guess. So once I did that and I got a little bit of cash flow, it made me realize, okay, I need to do more of this. But because California is so expensive, let me research to see if I can do it out of state maybe. And that's how I found Bigger Pockets. I found podcasts such as yours, Purchase to Profits, and other podcasts that made me, realize that out of state, it's a fear if you don't know and don't educate yourself. But once you educate yourself and understand how it works, it's no longer a fear. So that's when I, quote unquote, took it a little bit seriously. I flew out to the different markets, built my own team, bought a couple turnkey, and then I realized that I want to do my own thing. So I started doing the BRRRRs.
Nice. And what would you say is your biggest challenge right now with your real estate business?
Yeah, so my number one thing is scalability, and number two is also, um, I would say, making sure that I create systems and processes. So it kind of goes in line with scalability, right? So
Yeah.
I realized that now that I'm at 24, 25 units, I'm spending a little bit more time in terms of the admin work. So I need to take a, you know, reflection and see, okay, at what point do I bring somebody in to help me with the admin work, whether it be a virtual assistant or a part-time bookkeeper, office manager or whatnot, because the cash flow is there to slightly support it. But, as you know, with any business, you don't want to kind of kill the cash flow, so to say. I want to reinvest that cash flow to just, I'm in the hyper growth phase, in my opinion. So I'm trying to really do that analysis, but also create systems and processes where I can just really continue to scale, whether that be templates or different checklists that I use in my business, just so that when a deal comes along, I have like a 20-point checklist that I'm going to make sure I go through so that I don't miss anything like insurance, taxes, things like that. Because a lot of that I'm doing on my own right now.
Yeah. Well, actually, I think the good question to ask would be, could you acquire more deals if somebody else was doing the paperwork? I think that's $1 million question, right?
Right, right. Yeah, that's also another thing is like, okay, if I start to let go some of the duties that I have and, have somebody else help me with it, could this grow 2 times, 4 times faster?
Yeah. Yeah. And, so many people beginning in real estate, they don't think about the system side. So I'm really glad you brought that up because that's going to give any investor a platform or a foundation on which to build, right?
Yep, for sure.
So, what sort of routines or rituals then? You talked about developing a checklist and all that, but for yourself, routines and rituals that have helped make you a successful real estate investor thus far?
Yeah. So, I mean, for me, routine is continuing to underwrite deals every week. So, for me, I'm a true believer that there's a direct correlation between the number of offers that you make and the number of deals that you close on. And in order to make a lot of offers, I need to underwrite, right? So, I set multiple alerts on Redfin, which is my preferred kind of MLS type, what do you call it? Those apps, right? So
Yeah.
instead of Zillow, truly, I like Redfin. So for my own deal sourcing, I use that. I set a bunch of alerts. So whenever something that hits my criteria in terms of neighborhoods and price hit my inbox, then I'll plop it in my 10-minute analyzer and do some comparisons. And if I like it, I'm just going to tell my realtor to make an offer that same day. And for me, what I've kind of realized is that I probably need to look at about 60 homes to make offer on, I don't know, a couple of them, like half a dozen. So 10% of the ones that I look at, I make offers on. And then I'll probably get like one or two of them.
Yeah.
So that's kind of been like the funnel of me creating that routine of making offers. And then number two, I use this app called Trello. So I have a Trello board where I have, on the acquisition side, on the rehab side with my contractors, the property management side, and the back end refinancing or exit strategy, whatever. And I have, tasks for each of those main functions of the real estate business. So that's what I try to do in terms of creating a cadence so that, okay, I know that this property is on this board right now. So making sure that I go through all of that.
Yeah. And just so I'm clear, the Trello board, is that the visual representation where it moves along? Like,
Yeah, it's like a Kanban board. Yeah,
yeah.
and it moves along.
Yeah.
Exactly.
Yeah, that's pretty cool. I really like, for me, I'm a very visual person, so I like seeing things.
Yeah, no, me too.
Yeah. So, on the other side too, you've got, you're working full time. So how inside your mind or inside your brain do you make sure your real estate's doing well and your job's doing well? Because that must take some pretty good time management.
Yeah, that's a great question. So for the longest time, I've been working at a CPA firm, and I don't know if you have any friends or family that work as tax accountants or auditors, but man, we work a lot of hours, right? So
Yeah.
I did that for the longest time, and then I actually recently changed jobs about a month and a half ago. but I joined a software startup. So, startups also work hard. Um, so to your question, I think in order to make sure that I'm successful at both jobs, that's why I'm really harping on the systems, so that, during the day I could just focus on my jobs, and then at nights and weekends, I'm just focusing on my real estate. And the good thing about, living in California and investing in the Midwest is, some people don't like that. They don't like to live, where it's more expensive, and invest where, they want to move to the Midwest and start investing there. But for me, I like it for two reasons. Number one, I'm on the West Coast. So if I wake up earlier around like 6, 7 a.m. and, dish out all of my emails, they just started their work at 9, 10 a.m. So they're going to get my emails and get right on it. And by the time that they send me the follow-ups when I get home, then I can send all of my responses so that next day they can get back to it again. So it creates a nice little system that as long as I wake up a little bit early, they're not just waiting on me. Okay, Bo, what do I do? What do I do? Right. So that's good. And then number two, in California, I feel like because things are so expensive, whenever I go to meetups and networking functions, there's a lot of people with money. So private lending and raising private capital for me in the beginning, when I didn't have a track record, of course it was difficult. And I had to kind of use, family and friends and my own savings. But now that I have 24, 25 units, whenever I go to these meetups, people are like, hey, can I invest in your deals? Can I invest passively? It's been much easier for me because California, I feel like there's a bit more abundance of money and then deals. And then in the Midwest, it's the opposite. There's more deals than money. So,
yeah. And maybe can you talk about, you mentioned how it was difficult getting started raising capital. Lots of people who listen to this show are just getting started in that phase. So what sort of things did you do when you didn't have that track record to, just get the ball rolling?
Yeah, great question. So I get this question a lot. And what I did when I'm kind of taking a look back and retracing my steps, I actually created a business plan, and it was about a 12-page PDF. And I gotta thank my wife. She's a graphic designer, so she made it look really nice. And basically what that 12-page had was basically a background on myself and the markets that I invest in, and also a sample deal. So it was very simple. And basically you look at it and go, okay, this is who Bo is. This is why Bo likes Indianapolis, Kansas City, Little Rock as a real estate market. And then this is a sample deal if I were to privately lend with him. So I would have those deals, and then I would go to these networking functions and talk to people. And I'll be upfront. It's like, hey, I'm looking for, a debt partner, not an equity partner. And this is what I can offer. Would you like more information? And a lot of people would say yes to the information part, right? So I get their business card and I'll shoot them over this deck, and I'll follow up with them with like a 30-minute call, just explaining it to them, right? And they're kind of like warm to it. They're like, okay, I'm interested, or, let me know when there's a deal. And then when there's a deal, I'll bring it to them. And ultimately, I would say 80, 90% of them would say no, they're just not ready at this time. But for the 10% that are ready, I'll follow up with them. And I did a couple of deals with those guys in the beginning when I had about 4 or 5 properties. But what I also did was, to the guys, 80, 90% of them who said no, once the BRRR was complete, I would go back to them and explain to them what I did and how I went from A to Z, soup to nuts, in terms of getting my money back and finishing that exit strategy. And they really appreciated that. And a majority of those guys actually became my private lenders later on. So my tip to newer investors would be continue to just build that relationship with them. It really takes time, because if you think of it from the flip side, somebody that you met at a networking function and you're entrusting them with $80,000, $100,000 possibly, it takes some time for them to really get into the idea of it. Although they understand maybe, hey, this is secured by real estate, you get a promissory note, you're going to get insurance, and you're buying below market value at maybe 60, 70 cents on the dollar, it still takes time to get them comfortable with the idea.
Yeah. And what made you choose going the debt debt route instead of going with the equity partnership?
That's another great question. So there's two schools of thought for me on that one. And number one, I think it's the risk and the upside. So especially when I'm just starting out, when I only had 4 or 5 properties, number one, I really wanted to protect the investor. And I feel like if they're an equity partner, they're on the boat with me. They're in it for the ride, whether it be, good or bad. So if it works out well, of course, they're going to, get the equity from the BRRR. And their principal back and the interest. But if it doesn't work out well, they're going to lose their investment. Where on the debt side, it's whether I, do well or not on that particular deal. I feel like I'm protecting them with the interest, as well as just making sure that they're able to. I'm drawing a blank here. but basically, oh man, why am I drawing a blank here?
It happens to the best of us.
Right? Yeah.
Usually most inopportune times.
I get this question all the time. That's why, why am I drawing a blank? But basically, I wanted to protect them. And also on the debt side, it's you're not in a partnership for the long haul, because I've had offers to do equity partnerships in the past. And for me, it's like, if I'm going to do 1 or 2 partnerships with you, create an LLC, a bank account, and all that good stuff, we better be, looking to scale to like 100 or 200 or 15,000 together, because it's not worth the hassle of doing all of that. And a lot of these debt investors, they kind of want to be super passive, and they just want to get a return on their money. So it kind of worked out that way.
Yeah, no, for sure. So is there a deal that stands out as a Keystone deal that you've done?
Yeah, I would say it's my first BRRR. So I didn't even know it was going to be a BRRR when I was going in on it. Basically, it was a property that was on the MLS. And after I bought a couple of turnkey properties, I told my broker, I was like, hey, I want to start buying things on the MLS now that need just a little bit of work. And if you can connect me with some contractors, I'd like to do like a mini BRRR, for example. I don't want to move walls. I don't want to do anything that has to do with the foundation, things like that. So he found me this little deal pretty close to the turnkey property that I bought. So it was a good working class neighborhood. I would say it's C+, B- area. And it was on the MLS for a long time. So I kind of threw in a lowball offer. So I think it was on the market for like 47. I threw in like 35, like 12,000 less. I was like, let's see what happens. And they responded at like 40. And then we went back and forth, and we landed at 37.9 or something like that. So $38,000. So after I got that under contract, I flew out to Indianapolis right away. So that's a keyword, fly out to your markets. And I took a look at the property, and we got a contractor to get a bid for us and all that jazz. And the bid came out to about $12,000. So I would be all in at about $50,000. And then I would later find out that the roof was shot, so we needed to add another $3,000. So all in at $53,000. And the project was going to take about 3 to 4 weeks, which was done on time. And my broker managed the whole project. And then we got a refinance later on for $76,000.
Nice.
And that place rents for $750, so it's right about at that 1% rule. I didn't end up taking all of my money out, although it appraised for 76, I didn't take out 75% of that is 57. I just took out about $50,000, and so I left a couple thousand in the deal. And the reason why I did that was I wanted to cash flow healthy. I wanted that property to be a strong cash flow property and stand on its own, because I know a lot of people like the BRRR and strip everything like 75% and whatnot, but the more you strip out and the mortgage balance gets higher, the less your cash flow is, right? So for me, I didn't want to do the refi till you die strategy, and I wanted each of my properties to have at least, 200 to 300 net after, 10% vacancy, 8% maintenance. After all of that, I wanted to get a healthy amount of cash flow, but I only had $4,000 left in the deal. So for me, that was a win. So that was another reason why that was a keystone deal for me, because that was the proof of concept that I needed to continue to do more. And also that was my first BRRR, but also my first private lending deal. And because I was trying to get it with conventional financing on the front end, because it was an MLS property, little did I know that banks don't want to lend on distressed properties. So after going through all of the appraisal process and whatnot, I wish I would have known beforehand. The bank denied me and said, we can't lend on this property. So for me, I was like, oh, I'm kind of screwed, because it's going to close next week. And, I don't have a lender lined up. Nobody wants to take this. I didn't know the concept of hard money at that point. So I was just talking to one of my buddies. He's in Texas, and he's a guy that I met through a mutual friend, Facebook group. He's also an investor. And we haven't met face to face before this time, but he would send me deals, I would send him deals, and we'll just like learn together, right? And I would never imagine that he would have been my private lender. And I was just talking to him about, basically venting about this deal and saying, man, I can't believe my lender just, left me at the altar at the last minute. And he's like, how much you need? And I was like, I need about 38 plus closing, I don't know, like $40,000. And I have enough money for the rehab. And he's like, I'll finance it. It's like 40,000, I got you. And I was like, what? And in my mind, I was like, is this what they call a private lending deal? So it was very natural. I didn't know what I was doing, but I was really feeling it out. And I learned about what private lending was. I was like, hey, hold on, let me do some research to make sure you're protected. I'm protected. So I did a bunch of research on BiggerPockets. I talked to a buddy of mine who's an attorney who helped me draft up the promissory note. And then we got going. So that deal really was important for me because, it set the foundation of what I'm basically doing day in and day out today.
Yeah. And you mentioned that you found this on MLS. So what do you say to people who proclaim that you can't find deals on the MLS?
Yeah, I mean, please keep thinking that way so I can pick them all up. But no, jokes aside, for me, I think it's a matter of being creative, number one, and also, making it into a good deal. So number one, what I mean when I say creative is, Brandon Turner on BiggerPockets says this a ton of times, is that if you only have a hammer, everything you look at it is a nail, right? You only have one tool in your tool belt. Sometimes you need a wrench. Sometimes you need a screwdriver, whether that be subject to, whether it be private lending, seller financing, delayed financing. There's various strategies that meet with each property. And every property is a good deal at the right price. So if you're able to negotiate and the seller's willing to agree with you on price or terms, you just need one. You don't need the price or the terms. You just need one, because I'll pay, market price if I get the terms that I want, or I'll pay, your terms if I can get the price that I want, right? So it's either or. And once you have those foundations in each and every one of your deals, you're going to be able to make money, whether it be on the MLS, wholesalers, off market, whatever it might be.
Yeah, 100%. So since getting into real estate, taking it a lot more seriously, what impact has this had on you and your wife's lifestyle and all that?
Yeah. So I think for me, the passive income, it really hasn't hit me yet, just because I'm not using it. So whatever I get from the passive income, I'm really reinvesting it into real estate again. So it's kind of like your dividends and you're buying more stocks with it. But my wife and I, we're just really frugal in nature anyway. And she and I, we make pretty healthy income. And we probably save about 50 to 60% of our income. And we're also supplementing that into real estate. But the reason why I say this is, although we're not using the profits from our purchases, see what I did there?
I love that. That's great.
Yeah. Although we're not doing that, what it has allowed me to do is, it's a mindset shift. When I was working at a CPA firm for me, the path was very clear. It was like you're a staff, you become a senior, a manager, senior manager, then partner at the firm. And that path was very clearly defined in the number of years that you're putting in, the number of hours and all that jazz. And when I left as a senior, I was thinking, man, like I was so close to making manager. Like, should I do this? Should I, move on to the software company, all that things. But because I had this real estate portfolio going, it was no longer about just one stream of income and climbing up the corporate ladder. That burden was really lifted off my shoulders, and I can focus on other things, other passionate things, such as the software company. I'm really passionate about technology. I love people. I like the startup mentality and all that. So when this opportunity came to me, I was able to make that decision fairly quickly, not because I'm going to fall back on real estate if this doesn't work out, but more so that, hey, I'm no longer relying solely on this, my W-2 income to get me through the rest of my life. Does that make sense?
No, that makes total sense.
Yeah.
So let's look ahead 10 years from now, so a decade. Where do you see yourself with real estate?
Yeah. So my goal is to hit that 15, in 5 years. So in 10 years, I'm assuming I would have hit that 15K passive income goal and then far exceeded it. Money isn't really that important to me, but what it allows me to do. Number one, I want to help retire my parents. So as I mentioned early on the show, my parents are immigrants, and they didn't come with a lot of money, nor did they have money growing up. But one thing that they taught me was work ethic and just really working hard. And they still do that right now. But I feel like the tools that they had versus the tools that I had growing up here in the States were totally different. And I attribute all of my success to the groundwork that they laid for me. So they're at the age where they need to retire. My dad's 60, my mom's 59, and I want to help them. So for me, it's about putting on that safety mask first, in the airplane, put my mask on first and then help my parents. So, once I get to a comfortable goal where I'm at, and then I'm going to use, buy them a couple properties so that it could supplement their Social Security and whatnot. So that's goal number 2. And then number 3, I don't know if I'm just going to, kick the W-2 can and just go off into the sunset and play golf, things like that. That doesn't really motivate me. For me, it's like, sharing what I know, personal finance, doing my Bigger Cash Flow podcast and the blog. Those are what, motivates me to continue to work hard. So maybe I might reduce hours and go part-time 10 years from now, or focus more on, I don't know if growing that might be something in the future. Yeah, I'm not really sure, but I have a kind of vague idea of what I want to do, but definitely retire my parents, maybe even retire my wife if we have kids, and then focus on what really I'm passionate about.
Yeah, no, that's cool that you're looking to help your parents out.
Yeah. I mean, that's been a goal of mine since day one, 2 years ago when I started. And I just didn't know it'll happen as fast. I know I told my dad, it's like, hey, this is my grand plan, but don't hold your breath, because I'm not sure if it's going to happen super quickly. It might happen when you're 70. I don't know. I'm going to try my best. But my initial goal when I first started 2 years ago was buy 1 property, and then year 2 buy 2, year 3 buy 3. But it's been 2 years, picked up 24, and it's just gone up exponentially. So I'm pretty excited about where next year and the year after that it's going to take me. But that's my primary target, is to help my parents retire.
Yeah, that's awesome. So Bo, if somebody's looking to reach out, get in touch, learn more about your podcast and your blog, where can they find you?
Yeah, so if they want to reach out, they can go to my website at www.biggercashflow.com, or shoot me an email at bo@biggercashflow.com. I also have an Instagram page at biggercashflow. So try to put up a lot of content there in terms of snippets of my rehabs or quotes or interviews with other investors such as yourself. So yeah, check me out there.
No, that's great. I really enjoyed our chat today. So just want to say thanks so much for taking the time.
All right. Thanks, Seth.
Yeah, but pleasure was mine. And to you, our viewers, I wish you well on your journey from purchase to profits. See you next time.